जी मेरे ख्याल है स्टार्ट करें।
Assalamu alaikum and a very good morning to all of us who have joined us. On behalf of the Southern Regional Committee of Institute of Chartered Accountants of Pakistan, I warmly welcome you to today's webinar on navigating the AML landscape. My name is Saireen Fatima and I will be your host for this session. To commence today's webinar with the blessings, I would like to begin with the recitation of Holy Quran.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الرحمن علم القرآن خلق الإنسان علمه البيان. الشمس والقمر بحسبان والنجم والشجر يسجدان والسماء رفعها ووضع الميزان ألا تطغوا في الميزان وأقيموا الوزن بالقسط ولا تخسروا الميزان والأرض وضعها للأنام فيها فاكهة والنخل ذات الأكمام والحب ذو العصف والريحان فبأي آلاء ربكما تكذبان خلق الإنسان
Sadaqallahul Azim. The global financial system today operates in an environment where transparency, accountability, and regulatory vigilance have become more important than ever before. As financial institutions expand their operations and financial flows grow increasingly complex, the risk associated with illicit financial activities continue to evolve. In the context, anti-money laundering practices extend well beyond regulatory compliance. They have become a critical element of institutional governance, effective risk management, and overall financial stability. Today's session will explore how organizations can strengthen their approach to identifying and managing financial crime risks while remaining aligned with the expectations of both local regulators and international standard setting bodies. The discussion will also touch upon practical considerations, including enhanced due diligence, transaction monitoring mechanisms, and the identification of unusual or suspicious financial activity. Overall, the objective of this webinar is to provide participants a clearer perspective on the evolving AML landscape and practical steps institutions can take to strengthen their compliance framework. To formally commence today's session, it's my pleasure to invite Mr. Akash Mukesh Kumar to deliver the opening remarks. Mr. Akash serves as a senior manager in audit and assurance at EY and is actively associated with Southern Regional Committee of ICAP. contributing to its initiatives focused on professional development and governance within the profession. I now invite Mr. Akash to share his opening remarks. Thank you.
Hi, Assalamualaikum everyone. Am I audible to you guys?
Yes, you
I
are.
see many people. I see many people here who I know. So can they write on the chat box? Yes. Okay. So as you know, today's session is regarding the core concepts of anti-money laundering. So just to begin with, can you please guys tell me what do you think about when you hear the word AML? I think let's make it little bit participative rather than it's one way. Although I'm not the trainer today, esteemed trainer is Majid Akhtar Saab. Anti-money laundering. Wow. So people here understand that AML is anti-money laundering. But you know what role it plays? How do we navigate it? How do we understand why we are so worried about AML? Can you please guys explain? Aslan, Pratap, Hanif Sattar. I think now no one answers the questions, right? So that's why we have invited Mr. Majid Akhtar Sahab to deliver the core concepts of anti-money laundering to protect financial risk. Okay, you can say this. So, Majid Sahab, can you please, highlight the core concepts of AML so that they can understand? I just really wanted to make it really participative. That's why.
Yeah, sure. Please, thank you for inviting me. Yes, money laundering, in the very simplest form, is the process of converting dirty money into white money. So this has become of great importance because even the reputation of the country has become very damaged if the country's institutions are involved in activities of money laundering, terrorist financing, or proliferation financing. So therefore, the initiatives were taken by the government initially back in 2007 when the AML ordinance came in very initially. Then subsequently, that ordinance was converted into Act in 2010. So today we actually call it AML Act 2010. So now that is the main governing document which kind of provides the guidance for the overall frameworks which are created by various banking and non-banking financial institutions. So that's the brief, very simplest form of, very simplest example of money laundering is, or very simplest put this definition of money laundering is conversion of illicit money, dirty money into white money. That's the process of money laundering.
Yeah, thank you so much, Majid Saab. So I hope you guys understood the basic meaning of what is AML. That because what you're doing, you are converting your dirty money into a white money. So basically, I think your first topic is related to that only. That how the transaction is structured, how it is layered, and how it is get into the system. Right? Am I right, Majid Saab?
So yeah, it was a little trickier to exactly pick the content for the presentation. Yeah, so
Okay.
I kind of not I did not want it to make it very basic, and I also did not want it to make overly advanced. So I have tried to keep it a little moderate in a sense that it is going to be covering the basic concepts in along with the examples from the field. So that way,
Okay.
the core concepts are going to be explained with little examples from the society, from the industries.
Yeah. Thank you so much. So over to you, Majid Saab. Thank you.
Thank you.
Thank you, Mr. Akash, for setting the tone for the today's session and your thoughtful opening remarks. Moving forward, it is now my pleasure to introduce a keynote speaker for the today's session, Mr. Mohammed Majid Akhtar. Mr. Majid is a certified anti-money laundering specialist with over 15 years of experience in AML and financial crime compliance. He has held key compliance roles across institutions including HBL Currency Exchange, JS Bank, and NayaPay, and has also conducted numerous professional trainings for financial institutions and regulatory bodies. With that, I would now like to invite Mr. Majid Akhtar to deliver the keynote presentation. Mr. Majid, over to you.
Thank you. Thank you very much, Tatim. All right, so let's start with our today's presentation, which is navigating the AML landscape. We have already discussed the very basics about it, that how the world of money laundering basically functions. So I would like to start with the definition provided by the Act directly, the AML Act of Government of Pakistan. The AML Act defines the process of money laundering as that any person shall be guilty of offense of money laundering if the person acquires, converts, possesses, uses, or transfers property knowing or having reason to believe that such property is proceeds of crime, conceals or disguises the true nature, origin, location, disposition, movement, or ownership of property, knowing or having reason to believe that such property is proceeds of crime. Third parties holds or possesses on behalf of any another person any property, knowing or having reason to believe that such property is proceeds of crime. And in the very last part, very smartly, the lawmakers, in fact, have summed up all of the above definitions by uh, calling it section D. And the D part of this definition says participates in, associates, conspires to commit, attempts to commit, aids, abets, facilitates, or counsels the commission of the act specified in the clauses A, B, and C. So, ladies and gentlemen, this has become very, very sensitive matter. We, in our routine life, many of the times become victim of the uncalled for investigation. We would not be interested in called up by the law enforcement agencies, but unknowingly we might would have given advice to somebody who in fact had the illicit funds, and he or she was asking that how exactly the funds can be routed to another country, or how the funds can be structured so that I could hide the fund from maybe from my family. So these are various triggers we should all, particularly the accountants, the lawyers, financial institution resources, they should be very, very particular about that, because this is all about a white collar crime. Because anybody ever, if asking to find out the reasons and trying to find out that how the money, the actual source of money can be made hidden from the public, then we as an accountant should have a red alert popped up in our heads. We should be rather thinking that why is this person wanting us to share with him or her the knowledge that how the sources of funds can be hidden. So the key concepts on in this definition of money laundering, which was given by the government, are property. Property covers all assets, including tangible and intangible and monetary instruments. Intent. Intent can be inferred from circumstances under the Kanun-e-Shahadat Order 1984. This is the legal So therefore, the Kanuni Shahadat Order 1984 explains that how the intent can be inferred. The intent can be inferred by observing the conduct of any individual or any organization. By I mean, nobody can look or look inside our hearts that what do we have in our hearts with regard to any person or any financial transaction. But how do we behave? Taking that financial institution related transaction, that act is going to be, that conduct is going to be sign a kind of clue for people who are observing that this person might be involved in the process of hiding the sources of money. No prior conviction needed. Conviction for the underlying crime is not necessary. This is very interestingly, I was conducting anti-money laundering session for the FIA inspectors back, and we are at High Court. And I still remember the FIE inspectors even were worried, because this AML Act 2010, Section 3, which defines the money process of money laundering, The FIR of money laundering related crimes is little complex because if anybody is committing the crime of money laundering, then it's not like that the cognizance is taken against Section 3. First of all, the predicate offenses are to be proven, uh, and then in the second stage, Section 3 is taken into consideration for holding anybody accountable for the act of money laundering. So interestingly, it says that a conviction. So conviction is once the trial has been conducted and the person has been proven guilty. So it is not necessary. Only if you have suspicion, only if somebody has basic information that somebody was involved in the predicate offenses, then based on that initial predicate offense, the person can be hold accountable for the act of money laundering. So this is a little complicated because I in fact have used certain terms which are used in the court of law. However, this is exactly how things are working in at courts even right now. I still remember the gentleman who was this FI inspector. He was telling us that I mean that since the law is actually a little complicated, so the judges do not know how exactly to do the hearing, perform the hearing of this AML related Section 3 related violations, and even the lawyers, they do not exactly know right now that how the proceeding should be conducted. So, anyways, penalties which are defined are in that these includes imprisonment for 1 to 10 years, fine up to 25 million, rupee 100 million for legal entities, and forfeiture of property. So we need to be very, very careful that even if we are only giving mere advice to somebody, only by giving little mere advice to somebody, how that money can be hidden from its sources, even that can taken us into the uncalled for investigation. Therefore, be very, very particular about money laundering related discussions. If anybody is asking for the reasons or various ways how to hide the sources, then we should have our red alerts triggered in our minds. Stages of money laundering. For accounting firms, the three stages of money laundering involves exploiting professional services to introduce, disguise, and legitimize illicit funds. Accountants are often targeted because their expertise in financial oversight, tax compliance, and corporate governance can provide a veneer of legitimacy to criminal activities. So when I was doing this certification, which I completed back in 2010, it actually said that the people who are involved in this process of money laundering, they particularly look for accountants and lawyers because they too are the sound pillars who are great help if they are exploited rightly. So therefore, accounting firms, accounting bodies, and likewise law firms are required to be very, very vigilant before facilitating any client. So there are three stages of money laundering. First stage is placement. So I have tried to explain this concept of placement from the accounting firm's perspective directly. This is placement is the first stage where dirty money is introduced into the legal financial systems. So first, I mean, the examples which I in fact have tried using to explain the concept is about are the aborted transactions. Funds are lodged with an accounting firm to settle a proposed business transaction that is aborted shortly after, requiring the firm to refund the money to a different account. So many times, if somebody is paying us money in advance, and that any company or any client is telling us that we need to conduct a financial transaction, we need to do a wire transfer, or for that, little complicated structured financial transaction. For that, we are actually paying you in advance. So if any company and any individual comes to us with these advance payments and after a few days, after a few hours, that person comes back to us and tells us that you see the transaction is now aborted. Therefore, can you please return me the money which I, in fact, had given to you? So, but please give me this money into a different account. So, this should be a red alert because if somebody has given you money from one account and that person is asking for the return of that money in a different account, this is a red alert for any accounting firm. False invoicing, creating fraudulent invoices for non existing goods or services to justify large cash deposits into a business account. So Pakistan is primarily cash intensive economy where a lot of businesses are conducted based on cash. So for the criminals, cash businesses are very, very convenient because they can easily mix the illicit money, illegal money into the legitimate sources. I mean, into the money which was earned from legitimate sources. So therefore, they look for businesses where cash is more involved. False invoicing, creating fraudulent invoices for non-existent goods or services to justify large cash deposits into a business account. They will create the invoices which are actually fake, in fact, for goods or services which were apparently never offered. So while performing the audits, the audit firms, the auditors should be very, very particular, and wherever there is any suspicion, they should dive into that transaction to find out exactly whether those goods, which we, in fact, if somebody is trying to tell us that these funds were because of the huge, I mean, huge cash which was received was against the services which are provided, then one should further probe into it to find out that whether those services were actually, rendered or not. So blending funds, commingling illicit cash with the legitimate takings of a cash-intensive client business, example, a car wash or restaurant, before reporting the total to the accountant for filing. So as we discussed earlier just now, that Pakistan is a cash-intensive economy, and in such scenario, it becomes very easy for criminals to mix the money which was earned from illegal sources, and they mingle it, do co-mingle the illicit cash with the legitimate takings of cash-intensive client businesses before reporting the total to the accountants for filing. Before, I mean, for example, if CTR is to be filed, which is currency transaction report, which is going to be coming in the upcoming slides. So for filing the CTR, what they can do is that if 2 million above cash is required to be reported to financial monitoring unit. So they might, those in that 2 million transaction, 1.9 million can be of clean money, and zero point 0.1 million can be earned, might could have been earned from the dirty money. So the criminals, on one side, the controls are getting developed, controls are being created, and on the other side, the criminals are also getting informed about how the money laundering is being curbed, is being stopped by the regulators. So when I was doing this certification, even in our even in that certification, it was communicated to us. Then on one side, this certification is earned by people who are trying to stop money laundering, and also the same certification is being earned or learned or being some people are also enrolled in these certifications are criminals, because they would want to know that how various controls are actually applied to control money laundering, so that they could dodge those controls and could invent new ways to conduct the crime of money laundering. The second stage, which is of layering, which is also called which is also disguising, basically the purpose of basically layering is primarily disguising. The goal is to distance the funds from their original source through complex layers of transactions to confuse an audit. So, for example, if any auditor comes, that auditor might ask for the initial source of funds, and if those source of funds are were told, then the auditor might get satisfied. Okay, since this a source of fund has been given, therefore the money is clean. But the as they say that devil resides in the details. So if you further probe into those transactions, then you might get to know that those were only one of the layering transaction only, because actual money was layered, which is actually covered under, covered by a lot of layers of legitimate transactions, and beneath those various layers, you are going to find the actual source of fund. So therefore, it is very important when we are, whenever we are asking about any transaction, and if somebody is telling us any reason for transaction, so we should evaluate the transaction, analyze the transaction by finding out whether if the how actual results are in contradiction with the way if anybody is actually telling us the reason of that transaction. Shell company creation. Shell companies are those companies which are only on the paper. These are not they I mean these are not they're not physical companies. They are basically called SPVs, special purpose vehicles. They're only created to make a transaction appear legitimate, so that persons or people could, if whoever or regulator is trying to contain or curtail money laundering. So they would try to create these various legitimate companies which will look like legitimate companies, but they are actually only existing on papers. So shell company creation using an account to set up complex corporate structures or offshore entities that exist only on paper to move money between jurisdictions. So by creating these companies only on paper, the funds are transferred and routed to multiple corners of the globe. The purpose of these routing of funds to different corners of the globe is to perform the act of layering. And why do we perform layering? As we discussed, that the more number of transactions are conducted, the more money is actually getting distanced from its actual source. So that is the reason why various layers are actually created. Falsifying records, manipulating financial statements, or tax filing to give illicit business an air of legitimacy and hide the true beneficial owner. So even the financial statements are actually manipulated, or tax filing to give illicit business an air of legitimacy. There, I mean, the business is going to be illicit, but the appearance of that business is going to be made of a sort that people would think that that the business is legitimate, and hide the true beneficial owner. So many times, these criminals do, they in fact create these SPVs, and on paper you would not see their name anywhere, and you will find that there are directors of the company, there's a chairman of the company, but none of this using client funds to purchase high value assets like real estate or art, and then quickly reselling them to create a legal paper trail of proceeds. As we discussed, that layering is that process, is that step in which multiple transactions are conducted. And the reason of these multiple transactions is to take the money away from its actual source. So reselling assets mean you have purchased one asset from illegal. So for example, you have initially purchased a property, some criminal has purchased an initial property for example of 10 crores. uh, then subsequent that, I mean, the payment of that property was made through cash, and that cash in fact had come from the illicit means. So now once that property is purchased, then the person is going to further sell that property, and now after selling the property, the person would ask for the funds to be given into the financial account, into the bank account. So therefore initially illegal cash was involved in the purchase of property, and subsequently the property was sold to another person, and it was requested that the money of the property sold should be coming to the bank accounts. So this is, like, one way that layers actually created. Integration is the final stage of money laundering, to which we also call legitimization. The final stage reintroduces the cleaned money into the economy as seemingly legitimate wealth or business capital. So the final stage is attained by any white collar criminal by creating a lot of layers. Because even if any investigator would want to probe into any transaction, or anybody would want to dive into any transaction, then layers are created so much that even an investigator, it will become very, very difficult for any investigator to reach to its actual source. So once that purpose is achieved, then the money launderer has in fact completed or achieved the third stage of money laundering, which is integration. The final stage reintroduces the clean money into the economy as seemingly legitimate wealth or business capital. Fake salaries and dividends, issuing payments to non-existent employees or consultants from a income. So this is, like we said, that in the very final stage, all after completion of all of the layering part, then the money in finally is moved into the injected into the formal economy, and it gives an impression as if this was the genuine routing of funds, or genuine injection of funds is actually taking place. Business reinvestments, using laundered funds to provide capital injections or loans to a legitimate business, which then generates lawful profit for the owner. Any criminal, how, I mean, that criminal might start a business, a clean business, very clean business, petrol pump, maybe petrol pump, or any or any software house or anything like that, or any electronic money institution or any company. But that the initial injection of the funds are going to be coming from the illicit means. Funds to provide capital injection. So the initial capital is being injected into the companies which are created. And those companies which are created are going to be doing the legitimate business. But the company which is going to be doing the legitimate business, initially the funds were injected. Those funds were actually were illicit. So this is another task, another challenging task for any accounting firm. So whenever the audits are being performed, then the sources of very initial funds should be, should be evaluated, analyzed that, what were the sources of those very initial funds which were injected into any new business. Luxury purchases, buying commercial property or luxury assets using the clean proceeds from previously layered transactions. In the stage of integration, commercial properties are purchased or luxury assets using the clean proceeds from previously layered transactions. So earlier, the funds which were illicitly or illegally earned, now what has been done that now they have injected those funds into the economy, foreign economy by even purchasing, buying commercial properties or luxury assets out of those funds which were earned from illegal means. So, client behavior and relationship red flags. So, red flags, in fact, these are those various clues. If are coming into notice, then one should give it huge consideration, because many times we overlook these red flags. We only assume, we only many times assume that the funds might be coming from the clean sources. But if any of the red flags are getting popped up, then one should get very vigilant. These indicators often appear during the onboarding stage or when a long term relationship takes an unusual turn. Reluctance to provide information, hesitation or refusal to share know your customer documents such as beneficial ownership details or identification. So, this is a critical incident. If such incident takes place, then immediately the STRs should be filed with the financial monitoring unit. So this is one clue that you are trying to contact your client, customer, and you're trying to ask for certain basic information, but the client or the customer is reluctant to share that information. So this is one red flag, red flag, and that red flag pertains to the client behavior. Unexplained urgency, clients who pressure the firm to bypass standard checks or rush complex transactions without a logical reason. So many times these if some customers comes to us and that customer shows that the customer is in great haste, but there can be hidden agendas behind that. Clients who pressure the firm to bypass standard checks or rush complex transactions without a logical reason. So this is another red flag we should be giving importance to. We should not be overlooking this act of customer. Frequent advisor changes, repeatedly changing professional advisors in a short time frame without a clear justification, often a sign of opinion shopping. So, I mean, as we have discussed, that many times these money launderers they would look for people to give them the best of the advice. So many times the accounting firms might be getting changed very frequently, or the lawyers might be getting changed very frequently, or the accounts might be getting changed very frequently, or the signatories in the accounts are getting changed very frequently, or the directors in the company are getting changed very frequently, or the physical address of the company is getting changed very frequently. So wherever there are frequent, wherever there is frequent advisor changes, in this point we are talking about advisor only. So repeatedly changing professional advisors in a short time frame without a clear justification. This is also a flag, ladies and gentlemen. Avoidance of contact. A client who insistently avoids face-to-face meetings or uses intermediaries like power of attorney without an obvious business need. So many times these money launderers they would try to hide their origin. They would try to hide. They would not like to face or make the meetings in person. They would rather like to stay behind the bars, and they would not like to come up front to deal, and so that to avoid the situation where they have to answer back certain queries if are asked to them. So therefore, if any person of any individual is trying to avoid the face-to-face contact, continuously avoiding without any logical reason, so this should be taken as a red flag in client behavior. Financial and transactional red flags. These red flags typically surface during routine bookkeeping, tax filing, or auditing. Typical transaction patterns: sudden spikes in transaction volumes or large cash deposits in a business that does not normally handle cash. So this should be taken as one red flag. For instance, there is a company or there's a client. That client, primarily the business of that client is only conducted through the bank accounts. But then certainly what you observe as an accountant, that there was a single transaction which in fact involved a lot of cash, huge cash, and that cash transaction is not making any sense, because that this is a total change of pattern, because the normal pattern of transaction of that particular business was to conduct transactions only through the bank accounts. So sudden spikes in transaction volume or large cash deposits in a business that does not normally handle cash. So certain spikes in transaction volume. So there was a transaction volume, there was that average volume of any company which was apparent from the last 3 4 years, but then there is sudden spike. Suddenly you notice that there is a sudden spike in the transaction volume. So one should be very particular about finding out the reasons why this spike in fact had taken place. Structuring deliberately. Deliberately breaking down large sums into multiple smaller transactions. Example, just under $10,000 reporting threshold to evade detection. So many times, as it is the requirement of financial monitoring unit to report cash transaction, any transaction above 2 million is required to be reported, any single transaction. So therefore, if you come across that customer is or client is trying to conduct transactions which is just close to 2 million, but no transaction is actually touching the amount of 2 million. It is of like 19 lakh 999 rupees. So, and there you see multiple transaction stream of transactions which is of this amount, then we should be taking it as a red flag, because there is a huge probability that a large transaction is being tried to avoid from coming into the radars of financial monitoring unit. Because if single transaction will be conducted, then that transaction will be reported to financial monitoring unit. So to avoid reporting requirements, they would try to do transaction beneath the thresholds. So 2 million cash, above 2 million cash transaction is the threshold for the financial monitoring unit in the as provided in the AML Act. Unexplained wealth, a client's lifestyle or assets that are significantly inconsistent with their known income or profession. If you get to see somebody that the company is having very mediocre business, the balance sheets are not showing uh, huge assets, even the financial statements are not showing huge revenues coming in, but still the lifestyle of that individual or the directors you get to notice are very very lavish, then this should also be taken as something of concern. A client's lifestyle or assets that are significantly inconsistent with their known income or profession should be taken as a red flag. Circular fund movements, money that flows through multiple entities only to return to the original source with no discernible economic gain. So this is part of layering, as we discussed earlier, that a single transaction is going to be routed through multiple channels. So many times these transactions are routed from Germany, America, Australia, and Sydney, and then Australia, and then from the various of these countries, eventually the transaction lands back to the same account in Pakistan. From where it actually originated. And when we do the analysis of that transaction, then we figure out that out of the routing of that fund of the money from the original account, no significant economic gains were made. No gains were made at all. Money that flows through multiple entities only to return to the original source with no discernible economic gain. So this should also be taken as something of concern, that why funds were routed with having no apparent economic reason, and with having no benefits earned out of the rotation of that transaction into multiple accounts. Structural and geographic red flags. These flags involve how a business is organized and where it operates.
Achha, so
So,
Majid Sahab, sorry to interrupt you. Can we take some questions of the attendees? if you won't mind.
All right, sure, we can take. But I was actually thinking that we could complete the slides first, and then we could do the question answer in the end. Or if you want to be done right now, we can do it as well.
No, it's up to you. I just wanted it to be very engaging. So I think if we are
All right,
going
all
to
right. Yeah, that's fine. We can take questions if there are any.
okay, so Tareen, can you
Yeah, we
please?
are having some of the questions on the question answer session function. So the first question is from Mr. Ali Mustafa. My question is regarding absorption of transaction. Usually, companies do have multiple accounts which are split into activities, one for payment and the other for collection accounts for collection of funds. This is to simplify inflows and outflows. However, you have mentioned that as a risky transaction.
See, if I've understood clearly, there was a little voice cut at my part that there are two accounts and there are funds coming into different accounts and there are different purposes of it, right? This is what has been said, right? Tareen?
Sorry, please say again.
Yeah, but can you please repeat the question? There was a voice cut at my part. You have said that there are two accounts and two accounts, both of these two accounts are being used for different purposes, right? This is the question?
Yeah, one for the payment purpose and the other is for the collection of the funds.
Yeah, there's like I said, I mean these two, both of these two are genuine reasons. So if these accounts are making logical sense for any company, so there can be legitimate reasons why companies are doing it. You know, the clients are doing it. But many times these two different accounts are not required, and these two accounts are not required. And when you are trying to find out the reason why these two different accounts were created, when you're trying to find out the purpose of these two different accounts, then the client is not able to answer the question very confidently, then this becomes a red flag. I mean, as a practice, as a operational practice, as to organize the business operations, this practice of using two different accounts to handle two different operational needs of the business is not something to be taken as a criminal act. This is rather an arrangement only. However, if that arrangement is not in line with the business requirements of that company, then this becomes suspicious. I hope I've answered the question.
Okay, yeah. Moving to the next question. The next question is from Abashir. He says, given the increasing digitalization of trade through platforms like Pakistan single window, with specific data anomalies or transactions patterns, should we prioritize as early indicators of trade based money laundering?
All right. So trade-based money laundering is one very detailed area, one very detailed area of concern. So the very basic level monitoring which can be done on trade-based money laundering is to find out first of all the commodities which are being used, whether those commodities are overpriced or underpriced. So primarily in trade-based money laundering, the tool which is used is overpricing and or underpricing, over invoicing and under invoicing. These are the techniques used by the money launderers. So we should be very considerate. Now, one problem which the institutions face or the law enforcement agencies which face that there is no standard rate sheet, rate list available from any corner through which the overpricing and underpricing could be gauged. So normally, many financial institutions are even using the custom-based the lists which are provided by the customs. So based on that, certain rationales are actually created. So primarily for trade-based money laundering, many times shipments are done, but those shipments are only on paper. There were no physical commodities which were actually shifted or transferred from one port to another port. So this is another way trade-based money laundering is actually exploited. So it is very detailed area of concern. However, for the very basic level understanding from for the very basic level, initial level monitoring. I mean, one liner for the monitoring of trade-based money laundering is to ensure that over invoicing and under invoicing is not being conducted by the parties. Hope I've answered the question. So can we
Hope
proceed with slide?
Mubashir, yeah, hope Mubashir, you got the answer. If you have any concerns, you can again ask the question.
Moving to the next question. The next question is from Hassan Siddiqui. Given the sheer volume of transactions processed by large commercial banks in Pakistan. What automation solutions are being adopted in the industry to manage AML monitoring scale?
All right, good question. So, for the banking institution, State Bank in 2015, there was a circular issue to all the financial institutions, to the banking institution, that they should start using the TMS, which is transaction monitoring systems. So instead of, it is very impossible for anybody to do the monitoring of large financial transactions or large transactions, or only in through manual means. Therefore, the transaction monitoring systems exist in society, in markets. Using those transaction monitoring systems, then there are various rules which are created, and those rules are actually incorporated in those financial systems, and those then the daily transactions are actually pushed through those TMS systems, and against those rules, the transactions are actually vetted. And if there is any transaction which is meeting the criteria which was defined in the logic of any rule, then the transaction is actually stopped by that rule, and then the investigation can be conducted on that. There are various softwares available in the market, like there are various vendors there which are available in the market. Like there is one system, the name of which is coming into my head is SAS. Then there is another AML monitors, also available in the market. Then there are compliance monitors also available. Then there are many tools. There are, I mean, financial crime related, FCCM related. There is another tool of TMS which is called FCCM. So there are different tools available with these banking institutions. They have those tools implemented with them, and there are rules defined in those TMS systems, and all rules are, there are logics defined in those rules. And if there is, then the banking transactions actually are funneled through these TMS systems. And if there is any transaction which is caught in these, any of these rules, then the transaction is actually stopped, or the transaction not primarily stopped, transaction is actually routed, but the transaction comes under the radar for the analyst to do the evaluation of it. So
I
I've
hope it's
answered the
answered.
question.
Yeah. Next question is from the same Hassan Siddiqui. How mature are these adoptions compared to regional peers? Can we, as internal auditors, rely on them, especially considering high volumes of false positives?
Yes, yes, absolutely. The internal auditors can very much rely on them because these TMS systems are very professional vendors who are actually providing them. If there were I mean, the auditors, but there is one consideration which any auditor can be more bothered about, is that the vendor is recognized. Whoever is providing the transaction monitoring system TMS is not any unknown vendor. Or even if the vendor is unknown, then you can actually perform the analysis of that TMS. We should ask for the rule book as an auditor. We should ask from the organization of which we are doing the audit. We should ask for that which TMS, which transit monitoring system that organization is using. One, then we should also ask for the rule book. We should ask for the various rules which are currently implemented in the system. Two, then third, we should ask for that what are the logics which are defined in those rules. So based on these, then we can actually perform dummy transactions. We can ask the IT teams of that particular bank or any of the company. We can ask them that if then you can do a dummy transaction, and you can route that transaction through, you can funnel that transaction or push that transaction through the TMS, and you can actually observe yourself that whether if the monitor the scenario which is implemented in the system, whether that scenario is catching any transaction or not. So that way you can actually gauge whether the TMS which is implemented is it doing the core job or not.
So basically, you mean to say they need to test the controls over it, right? What has been
Absolutely, yes.
implemented? Yeah.
Absolutely, absolutely, yes. I mean, there can be controls implemented, but this is not enough. It is also required to be evaluated that how many types of controls are there. I
Yeah.
mean, if there are controls implemented with regard to CTR avoidance, high cash transactions are being monitored, wire transfers are being monitored, remittances are being screened, patterns are being monitored, timing of transaction are being monitored. So these are various ways. These are various ways that the transaction is conducted. So yes, absolutely. The answer is that the controls should be evaluated, and that whether if the what are the different type of transactions which are conducted through any financial institution, if that is listed down, and then against those various type of transaction, whether if there are any controls defined or not. I mean, this is going to be a perfect initial homework to do the analysis of these controls.
Okay. So, Hasan, I think you got your answer. So it's fine. So please let us know.
Moving to the next question. The next question is from Manur Umar. How can auditor distinguish between legitimate complex tax planning and the layering stage of money laundering when reviewing transactions, especially international transactions?
But can you please repeat the question?
Yeah, sure. How can an auditor distinguish between legitimate complex tax planning and the layering of stage of money laundering when reviewing transactions, especially international transactions?
All right. So I think the question is pertaining to tax. So in tax, there are like two type of situation. One is tax management and second is tax evasion. So tax evasion, in fact, has been included into the predicate offenses of money laundering. Earlier, tax evasion was not included. So anytime, and whether domestic or international tax transaction being evaluated, then whether this should be monitored that how taxes are being held are being dealt by the organizations, whether there are whether there, I mean, for instance, if somebody has 1 million rupees in the pocket, and that 1 million, the source of fund of that 1 million rupee is that a tax was supposed to be paid and the tax has not been paid. So now that 1 million becomes suspicious. Now we need to find out that how that 1 million exactly was earned. Was that through tax managing the various tax laws, or by by totally not filing tax return at all, by not submitting a tax at all? So if somebody is managing taxes, this is done within the ambit of the various regulations which are provided. But tax evasion is total different regime. In tax evasion, people are not paying their taxes at all. So if you come across any transaction where there are evasions of taxes taking place, then this is the matter to be reported in terms of suspicious transaction report to financial monitoring unit. Hope I've answered the question.
Let's have another question and then we can move to the rest of the presentation. For the next question is from Nawan Ahmed. Now, how frequently should organizations update their AML policies and procedures to remain compliant with evolving regulations in the today's world?
How frequently the organization should do what?
How frequently should organizations update their AML policies and procedures to remain
Okay.
compliant with evolving regulations?
Great, great, good question. So, okay, so there has been different standards prevailing in society, in markets, in the industry. There are still companies, there are still banks, there are still institutions who, in fact, devise their compliance policies, AML policies on 3 years basis. However, there were some guiding documents from the State Bank particularly. In State Bank, there was a circular issued to banking institutions back in 2017, in which the whole compliance framework was defined, and how the compliance department should be structured. And in that compliance framework circular, it was also advised to these banking institutions that the compliance policy should be revised at least on every year basis. So the revisit should be done on yearly basis, but this should be only done on yearly basis if there is no significant change which has taken place during the year. The standard of revision or revisiting of these policies should be after the completion of 1 year. But if during the year you come across any additional guidelines coming from FBR or from any regulatory body, and those regulatory authorities have issued certain guidelines which are not incorporated in the existing policies, then one should not wait for the completion of 1 year term, and the revision in the policy should be made there and then. So if the revision of policy is required based on the new guidelines which are not currently available in the policies, then the immediate revision should be taken place. Else, in the normal course of business, the revision should be at least done on year-to-year basis, every year basis. I hope I've answered the question.
Yes, Mr. Mazuk, we can continue with the presentation, please.
All right, sure, thank you. All right, so next slide says structural and geographic red flags. These red flags Okay. These red flags involve how a business is organized and where it operates. So, when we are talking about money laundering and terrorist financing and proliferation financing, so another thing which becomes of high importance is the geographic location of the business, because there are different geographic locations uh, which are actually famous or non-cooperative in terms of the compliance of regulations. FATF, Financial Action Task Force, it also issues a list of NCCT, non-cooperative countries and territories. So, if any of your business, for example, you're conducting a transaction with any client, or you are doing the audit of any client, and you come across that the prime customer of that client of yours is coming from the FATF, those countries which are on the radar, non-cooperative countries and territories. If the transactions are continuously coming from those regions, then there should be a red alert. So structural and geographic red flags are of great importance. We should look for those various countries where the AML related, CF related, and CPF related controls are weak. And if transactions are routed from those locations, then we should become alert on those transactions. Complex ownership structures, use of multiple layers of shell companies or offshore entities in tax havens without a legitimate commercial purpose. So many times, like you said, that many times the suspicion is going to be arising. However, then after the arising of suspicion, should we file the STR, report the matter directly? No, initially there should be homework done. Yeah, initially the homework should be done at our part. So we should initially ensure whether our suspicion is true or not. If our suspicion proves up to be true, only then we should proceed with the filing of STRs. So, use of multiple layers of shell companies or offshore entities in tax havens without a legitimate commercial purpose. There is no legitimate commercial purpose, and still you can see you see a lot of shell companies formation. Then, and the ownership has structure has been made very complex. Then this can be probably made to hide the ultimate beneficial owners. This is going to be the reason why somebody might be doing it. So there this should be a matter of concern. High risk jurisdictions, frequent transfers or business dealings with countries known for weak AML CTF controls or high corruption. So the people call it CFT and CTF both. So CTF is counter-terrorism financing, and CFT is counter financing of terrorism. So I mean, the both ways it is actually correct. So frequent transfer of business dealings with countries known for weak AML CTF controls or high corruption. As we discussed, that if your client is dealing with the companies which are high risk countries, and these are the countries with having weaker AML CTF control, then this should be a radar. This should be a red alert. Unusual asset valuations, assets or securities that are marked at excessively high or low values compared to market rates. Now, this should also be of concern, because many times these money launderers, they would book loss. They would book a loss just to give the legitimate look to a transaction which was actually earned from illegal means. For example, if somebody has 100 million out of corruption, and that person wants to hide that money, and that person would be ready to lose 30 million on that, because even if out the 100 million was totally earned from the illegal money, from the illegal source, corruption, and 30 million, if somebody loses to make it look like legitimate, even then, even after losing the 30 million, you still are earning that money. That person would still be earning 70 million. So these criminals, they would lose money many times. They would lose money many times only to give their transactions give a look of a legitimacy. So this should be a red flag. Okay, financial and transaction red flags. These red flags typically surface during routine bookkeeping, tax filing, or auditing. A typical transaction patterns, sudden spikes in transaction volumes. I think we have done that, if I'm not wrong. Yes, we have done that. Okay. Bookkeeping and reporting red flags, indicators found directly within the company's financial records. Okay, vague invoice descriptions using generic terms like consulting fee or management services without detailed supporting documentation. So we should also look for, when we are conducting the audit, that whether if the precise and specific purpose was defined for any transaction or not. If the generic terms are used, then this is also a red flag. So as it is explained in this slide, that vague invoice descriptions using generic terms like consulting fees or management fees or management services without detailed supporting documentation. So if there is no supporting documentation, then these generic terms should be taken with suspicion. Unjustified intercompany loans, loans between related parties that lack formal agreements, interest rates, or repayment schedules. This should also be a matter of concern, because if, for example, you're dealing with a conglomerate is a big group with having a lot of businesses, a lot of companies, and these companies are giving loans to each other within the group. So loans between related parties that lack formal agreements, and these loans are being given without any formal agreements. There is no paperwork done, and these loans are only being given. So, loans between related parties that lack formal agreements, interest rates, or repayment schedules. This should also be taken with suspicion. Frequent revisions, repeatedly amending or filing tax returns late in response to audits or regulatory inquiries. For example, only if somebody is waking up to file the tax returns, or doing the submission of the regulatory requirements, only after somebody is highlighting it, and this is being done on repeated basis, then this should also be taken as matter of concern. Repeatedly amending or filing tax returns late in response to audit or regulatory inquiries. So these are the various typologies which are used in the market. Typologies, what is typology? Typology is the way money laundering is, or terrorist financing or proliferation financing is done. To the specific term for that is money laundering typology. So, regulatory oversight, chartered accountants regulated by the Institute of Chartered Accountants of Pakistan. Cost and management accountants are regulated by the ICMAP, and other accountants, firms not registered with ICAP or ICMAP fall under the supervision of the Federal Board of Revenue, which is FBR. So, key compliance obligations, customer due diligence, firms must identify and verify the identity of clients, beneficial owners using reliable documents. So whenever you are, contacting any client, then firms must identify and verify the identity of clients and beneficial owners using reliable documents. Genuine CNICs, genuine passport. When I say genuine, what I mean is, if somebody is giving only photocopies, then those photocopies should not be relied upon. Or somebody is trying to give you colored copies, those colored copies should not be relied upon. The original CNIC, original passports should be taken for the purpose of due diligence. Enhanced due diligence required for high risk clients, including politically exposed persons and those from high risk jurisdictions. So high risk jurisdictions are those where there are controls with regard to money laundering and terrorist financing and proliferation financing. Wherever the controls are weak, then those jurisdictions are called high risk jurisdictions. And politically exposed persons, those politicians which are having access to the taxpayers' money. Whoever is having access to taxpayers' money, and they can do the manipulation with the taxpayers' money, that person is actually a politically exposed person. So enhanced due diligence. So difference between customer CDD and EDD is that when we do EDD, we take extra information, whatever extra we can obtain with regard to that customer, his business, her transactions, or everywhere about whatever we can we should obtain, so that if there is any transaction which is in contradiction to the profile which we have created, then those transactions should come on our radar. Record keeping, all records of business relationships and transactions must be, the state bank has different requirements. State bank says for 10 years. So there are bodies who in fact ask for 5 years record retention at least. Compliance program, firms must appoint a compliance officer, conduct regular staff training, and implement an independent audit function to test AML systems. So the firms are not only required to create the AML controls, but they also are required to hire the compliance officers, so that the compliance officer could conduct staff training, and implement the compliance policies which were created, and subsequently independent audit function should also be there to do the testing of those various controls which are created. Reporting requirements, Pakistan uses two primary reports type, both filed electronically through the Go AML portal to the Financial Monitoring Unit. Financial Monitoring Unit provides one portal which is called Go AML, and on that GoML, anybody actually creates any formal financial institution, or anybody who is RE, reported entity, is required to create any the ID with the Go AML. The initial questions are asked by the financial monitoring unit when the ID is being created. Once the ID is created, then you actually get an access to Go AML. So once the access to Go AML is attained, then that ID is actually used to file STRs and CTRs. What is suspicious transaction report? Trigger any transaction or attempted transaction suspected to be linked to money laundering, terrorist financing, or predicate offenses like tax evasion. So if there is any transaction which you find to be not making economic sense, as customer is with regard to that, then that transaction is going to be considered as suspicious transaction. And the timeline for filing of the STR is immediate basis, must be filed promptly. So usually people, I mean, submit it within 3 to 7 days after forming a suspicion. That initially, when the moment the suspicion is actually formed, so we should initially do a little homework to ensure that the suspicion is genuine. Many times the suspicion is not genuine; it is only a feeling that probably the transaction is suspicious. So after doing the initial homework, if the suspicion sustains, then the STR should be filed with the financial monitoring unit. Second is CTR, currency transaction report. Mandatory for cash transaction equal to exceeding PKR 2 million. Timeline must be filed within 7 working days. So the CTR is requirement is very, very clear that the CTR is required to be filed within 7 working days. Okay. Penalties for non-compliance under Section 33 of the AML Act. Failure to comply with the reporting requirements or providing false information can lead to imprisonment up to 5 years. Anybody can go behind the bars for 5 years. Whoever is committing the crime of money laundering. Fines up to PKR 500,000. License revocation. Regulatory bodies, ICAP, FBR, may revoke the firm's registration or practice license if the controls are not properly created, if the compliance is not being ensured of the various instructions which are issued with regard to creation of AML control, no AML policies are created, and no heed is being given to the way the clients are conducting the businesses, no STRs are being filed, no CTRs are being filed where those are required, then regulatory enforcements are taken into action, are actually taken against such bodies, against such firms. Regulatory bodies, ICAP, FBR, may revoke the firm's registration or practice license if somebody is doing total non-compliance of these issued guidelines. Then the matter can go up to an extent where the licenses are totally revoked. ICAP's mandate as an AML CFT regulator. Legal standing, ICAP is designated as an AML CFT regulatory authority under Section 682 of the AML Act 2010. Core responsibility to ensure member firms comply with the ICAP AML CFT regulations. Strategic alignment, our oversight directly impacts Pakistan international standing with the Financial Action Task Force.
Majid, I'm sorry to interrupt you, but we have to wrap it up as
All
soon.
right,
Thank you.
okay. Yeah. So this was the reason why I was wanting the question answer to be done in that. All right, anyways, so let's me go very quick on this. The 2026 AML risk landscape. So there are emerging threats which are to be taken into consideration, like digital assets, real-time payment system, and generative AI. These are causing some troubles, blurring lines. I mean, it is very difficult to identify the core sources of the funds. So at least, do we have 5 minutes, or we need to wrap up right now?
Yeah, you can finish it in 5 minutes. Thank you.
Okay. So the AML, the key pillars of ICAP supervisory framework is there is required to be, and there is AML supervisory board. Risk-based approach is required to be adopted, where customers are classified into 3 risk categories: low risk, medium risk, high risk, and there are guidance provided. There are guidance available. We can have another session to explain how these risks are actually classified. So risk-based classification is actually done, and the enforcement is done based on these section rules. The strategic role of the council is to create policies and do approvals of it, and monitoring the effectiveness of AML supervisory board, and also to ensure that these acting with utmost integrity with free contracts as per the ICAP code of conduct. That not only these party policies are created, controls are created, but these are implemented in true sense. So reporting firms are required to perform the CDD, as we have discussed, do the record keeping, file STRs, To meet regulatory requirement, one should ensure the compliance with AML CFT laws, uh, follow ICAP related. Okay, Rizwana, yes, you have something to say, please. I can see a hand raised. Somebody wants to say
No, no,
something?
just you just carry on or wrap it up.
All right, all right. Or compliance with additional directive should, or if there is any additional guideline given by the ICAP, then those guidelines should also be ensured to made compliance of. ICAP has issued multiple guidance documents, some from the public source, which I have found out are AML CFT FAQs, guidelines for accountant, FAQ on targeted financial schemes, guidelines on TFS, risk management and prevention. Now, this is again a full day topic, but since we are running short of time, we are already short of time, so we will discuss it in some other session in detail. The risk should be managed properly, and though the risk management should be done in a manner that if the customers are properly classified into these categories, then the management risk is going to become easier. Like proper classification of customers should be done into low risk, medium risk, and high risk. So once that is done properly, then only we will be able to do the proper risk management, and only then the compliance of all issue guidelines can be ensured. So with this, we in fact have reached to the end of this presentation. Hello.
Master, for that engaging and informative presentation. Your
Yeah.
experience and inspires member of ICAP and currently serves as Executive Vice President and Chief Financial Officer at JS Investments Limited. He has also previously served at ICAP as CFO and head of anti money laundering, where he played an important role in national AML CFT initiatives and engagements with regulatory stakeholders. Notably, he was also part of the government of Pakistan's core team involved in the country's engagement with FATF and APG, contributing to the broader efforts that led Pakistan's exit from FATF grey list. We are truly honored to have him with us today. Mr. Rahman, I would like to invite you to share your remarks. Thank you.
Assalamu alaikum. I hope I'm audible. Wait, can anyone confirm?
Yeah, you are. Yeah, you
You
are.
can bet like you're not clear. Your voice is not clear.
Thank you, Terry, for the introduction, and thank you, SRC, for this wonderful session. Although कि अब क्योंकि पाकिस्तान फेड ऑफ ग्रे लिस्ट में है नहीं, तो इतना ज्यादा जो है वो लोगों का ना सिग्निफिकेंस नहीं नजर आता। जब हम 2018 से 20 का टेन्योर देखते हैं, 22 तक का, तो उस वक्त जो हालात थे जब पाकिस्तान ग्रे लिस्ट में था और सारे मामला थे, तो थिंग्स आर वेरी डिफरेंट। बट ऑल्दो इट्स वेरी इंपॉर्टेंट कि हम जो है वो एक पेस में रहें फॉर द कंप्लायंस, ताकि आगे जो हमारी म्यूचुअल असेसमेंट होनी है तो उसमें मामला जो है वो हमारे पाकिस्तान के हक में बेहतर ही हों। अच्छा, व्हाट आई विल डू टुडे इज, क्योंकि 10 मिनट का मुझे टाइम स्लॉट दिया गया है, सो व्हाट आई विल डू इट, मैं तो देख रहा था कि माशाल्लाह माजिद साहब हमारे उस्ताद, उन्होंने जो है वो बहुत अच्छी तरह से जो है वो सारी मामला जो है वो कवर किए। मैं जो है वो पाकिस्तान के मैटर्स जो गुजरे हैं उस पे, और उनसे हमने क्या लेसन लर्न किए और हमें आगे क्या करना है, उस पर थोड़ी सी बात करना चाहूंगा। और क्योंकि मैंने देखा है जो हमारे कैंडीज हैं उसमें काफी अकाउंटिंग फर्म से भी हैं, सो इट्स गुड कि हम जो है वो थोड़ा सा उस पर्सपेक्टिव को भी लेके चलें, आईकैप के पर्सपेक्टिव को भी, एज आई एम ऑल्सो करेंटली इन दी आईकैप एमएल सुपरवाइजिंग बोर्ड भी। तो जो इंस्पेक्शन वगैरह और जो भी कुछ होता है वो हमसे ही जो है वो एंड में होता प्रेजेंट होता है हमारे पास। ठीक है। अच्छा, सबसे पहले पाकिस्तान ग्रे लिस्ट में आया क्यों? पाकिस्तान का ना हिस्ट्री में इट वाज अ यूनिक केस कह लें। अदरवाइज जितने भी आज तक ग्रे लिस्ट में कंट्रीज आए हैं, सो उनका बेसिकली हमेशा एक एक्शन प्लान के थ्रू जो है वो ग्रे लिस्ट में आते थे। पाकिस्तान के साथ एक अलग ही सिनेरियो था। 2018 में पाकिस्तान को एक 27 पॉइंट एक्शन प्लान दिया गया, और उस वक्त जो है वो 2018 में, यस, और उस वक्त पाकिस्तान को जो है वो ग्रे लिस्ट में मूव कर दिया गया। हम उस प्लान को कहते हैं अपने फेटअप की उसमें लैंग्वेज में मनी लॉन्ड्रिंग प्लान बेसिकली। उसका रीजन ये था कि अब 2018 में जब म्यूचुअल असेसमेंट हुई पाकिस्तान की, म्यूचुअल असेसमेंट पाकिस्तान की जो है वो एशिया पैसिफिक ग्रुप करता है। फेटअप एक मेन बॉडी है और उसने बेसिकली अपने डिफरेंट रीजन्स में, उनको हम कहते हैं FRSB, फेटअप स्टाइल रीजनल बॉडीज। उन्होंने बेसिकली डिफरेंट रीजन में सेम बॉडीज जो है वो बनाई हुई हैं, और उनका काम भी वही है जो फेटअप का काम है, सो दे आर इक्वल टू दैट फेटअप एज वेल, सही। तो जब 18 में हमारी म्यूचुअल वैल्यूएशन हुई तो पता लगा कि सबसे ज्यादा इशू आया, वो ये आया कि हमारी जो सुपरविजन है फाइनेंशियल इंस्टीट्यूशन की, उस वक्त स्टेट बैंक की एक अदालत था जो कि काफी थोड़ा मेच्योर था विद रिस्पेक्ट टू AML CFT। SECP भी लैग करा था, लेकिन जो DNFBPs हैं जिसमें खासतौर पे ये अकाउंटेंट्स, लॉयर, ये सब आते हैं, उनका तो सिरे से नामो निशान ही नहीं था ना, मतलब उनकी सुपरविजन का। तो वो एक बेसिकली एक हैवी ड्यूटी, हमारे पास एक्शन प्लान खड़ा हो गया इस FATF की तरफ से कि आप इसको पूरा करें। नॉर्मली 1-2 साल, 2-3 साल मिलते हैं पूरा करने के लिए। तो जो सबसे बड़ा चैलेंज था वो ये था कि अब जो है वो किस तरह डेजिग्नेट किया जाए अकाउंटिंग बॉडीज को और लॉयर्स को इस रिजीम में। तो आपने देखा होगा आमला जो है हमारा एंटी मनी लॉन्ड्रिंग एक्ट है, उसमें शेड्यूल 4 है जो कि रेगुलेटरी बॉडीज को डिफाइन करता है पाकिस्तान में कितनी रेगुलेटरी बॉडीज हैं। तो बिफोर 2020 ये शेड्यूल 4 सिर्फ स्टेट बैंक को कवर करता था, इसके अलावा इसमें कोई रेगुलेटरी बॉडीज थी नहीं। अब आप देखें तो उसको काफी ज्यादा वाइड रेंज कर दिया है। अब हमारा स्ट्रक्चर जो है MLCFT का ओवरऑल गवर्नमेंट के लेवल पे, वो एक बहुत ही एक प्रॉपर एक स्ट्रक्चर बन गया है जिसमें हर एंटिटी, अब कोई ऐसा नहीं है जो कि निकल जाए उस entity से ना। अकाउंटेंट्स की बात करें तो ICAP और ICMA को रोल दिया कि आप जो है वो उनको रेगुलेट करेंगे। अदर देन ICAP ICMA जो है वो FBR को रोल दिया गया, बट उसके साथ साथ एक सेकंड लेयर के तौर पे, क्योंकि हम ICAP एंड ICMA जो है वो प्योर गवर्नमेंट बॉडीज नहीं है, जिसको हम कहते हैं एक बिल्कुल नेशनलाइज द्वारा इसको कहते हैं। तो इसलिए ये SECP का रोल दिया गया एज एन ओवरसाइट बॉडी जो कि ICAP और ICMA को ओवरसाइट करते हैं। सो एज अ रेगुलेटर ICAP जो है वो फर्म्स का रेगुलेटर है, और ICAP को भी जो है वो रिपोर्टिंग करनी होती है टू दी SECP। तो ये तो पूरा स्ट्रक्चर हो गया। अब उसमें हुआ क्या, 2019 में जब इस प्लान पे काम हो रहा था, एक्शन प्लान पे, सो कुछ ऐसे मामला हुए कि कुछ टेररिज्म के इवेंट्स उस जमाने में काफी हुए थे, 18, 19, 20 में। सो व्हाट वी एक्सपीरियंस्ड इज कि हमें जो है वो फेटफ और उनकी जो बॉडीज हैं उनकी तरफ से एक एडिशनल 7 पॉइंट एक्शन प्लान मिल गया है। वो प्लान बेसिकली टेररिस्ट फाइनेंसिंग के ऊपर था। ऑल्दो उसका अकाउंटेंट से ताल्लुक नहीं है, बट ओवरऑल अगर मैं पाकिस्तान रिजीम में बात करूं तो हमारे पास अब 27 + 7 34 पॉइंट्स का एक एक्शन प्लान आ गया। ये भी हिस्ट्री में बहुत कम है कि इतना मेजर प्लान जो है वो किसी कंट्री को दिया गया हो। बट अप्रिशिएट करना चाहिए गवर्नमेंट इदारों को भी, ओवरऑल जितने भी इदारे थे सबने उसको जो है वो बहुत डिलीजेंटली जो है वो चीजों को देखा। और हमें जब 3 साल का टाइम दिया गया था, बट वी सक्सेसफुली कंप्लीटेड द इंटायर प्लान इन जून 2022। और जब फेटफ की टीम अक्टूबर 22 में जब पाकिस्तान आई, सो व्हाट, क्योंकि जब तक आप एक्शन प्लान में जाते हैं, फेटफ ग्रे लिस्ट में होते हैं हम, तो उसके बाद उस वक्त तक जो है वो फेटफ आपको उसको रिमूव नहीं करता जब तक कि एक ऑन साइट विजिट ना हो जाए, जस्ट टू चेक द इम्प्लीमेंटेशन ऑफ द ओवरऑल efforts that has been reported to the FATF in their off-site meetings. So जब अक्टूबर में FATF की टीम ऑन साइट आई तो उन्होंने इंडिविजुअली जो है वो सब रेगुलेटर से मुलाकात की। आई वॉज द वन हु वॉज बेसिकली लीडिंग द अकाउंटेंट सेक्टर, द DNFBPs। और हमारी कुछ फर्म्स, क्योंकि प्राइवेट सेक्टर से मिलना भी था, तो हमारी कुछ फर्म्स को भी हमने इन्वाइट किया था जो कि वहां पे FATF की टीम से जो है वो मिली थी। और उसके बाद FATF सेटिस्फाई हुआ और हमें जो है वो उस प्लान से निकाल दिया गया। अब अच्छी बात क्या है, अब देखें मसला ये है कि अब जो हमारी नेक्स्ट म्यूचुअल इवेल्युएशन है वो प्लान है इन 2028। अब उसके लिए जरूरी है कि अब जब फेटर म्यूचुअल इवेल्युएशन के लिए आता है तो वो बेसिकली आपसे 2028 तक का जो है वो एफर्ट्स और जो AML CFT के जो मामला हैं वो सारे जो है वो चेक होते हैं, APG के रिजीम, APG चेक करता है। सो व्हाट वी नीड टू डू इज, जो रिदम जो स्पीड हमने जो है वो 2022 तक जो है वो मेंटेन की हुई थी, दैट शुड कंटिन्यू। ICAP के लेवल पे तो मुझे पता है कि वो हम जो है वो कंटिन्यू कर रहे हैं और फर्म्स की जो है वो प्रॉपर इंस्पेक्शन और प्रॉपर मॉनिटरिंग हो रही है। बट इट इज नेसेसरी कि हम जो है वो इन एवरी एस्पेक्ट, फाइनेंशियल इंस्टीट्यूशन की जगह पे भी वहां भी बहुत अच्छा हो रहा है, और हमारे जो है वो नॉन डेजिग्नेटेड फाइनेंशियल इंस्टीट्यूशन जो है उस पर भी जो है वो इस चीज को मेंटेन किया जाए। जरूरी क्यों है, बेसिकली फेटअप, जब आप रियलिस्ट में आते हैं ना, तो जिस तरह हमारे साहब ने बताया कि आप जब हाई रिस्क कंट्रीज में किसी से क्या बिजनेस रिलेशनशिप करते हैं सो यू नीड टू परफॉर्म इनहेंस ड्यू डिलिजेंस, मतलब ईडीडी करना आपके लिए मस्ट है, अदरवाइज आप नहीं कर सकते, मतलब फर्दर स्क्रूटनी करना होता है। तो जब पाकिस्तान ग्रे लिस्ट में था, तो उस वक्त जब पाकिस्तान के साथ किसी क्रॉस बॉर्डर ट्रांजेक्शन में जब बिजनेस रिलेशनशिप होता था, सो पाकिस्तान वाज कंसिडर्ड एज अ हाई रिस्क, और बहुत मुश्किल होती थी बिजनेस रिलेशनशिप एस्टेब्लिश करने में लोकल कंपनीज को विद देयर काउंटर पार्ट इन डिफरेंट कंट्रीज। सो ग्रे लिस्ट के रिमूव होने के बाद पाकिस्तान को एक ये फायदा हुआ कि अब जो है वो पाकिस्तान जो है वो हाई रिस्क कंट्रीज में उसका शुमार नहीं होता। सो अब इसमें कुछ लेसन लर्न जो हमने किए ड्यूरिंग दीज ऑल एक्सरसाइजेस, वो मैं उस पर थोड़ा सा जो है वो ब्रीफ करूंगा। बेसिकली द फर्स्ट एंड फॉरमोस्ट रूल ऑफ फेटअप, जो हम अब वैसे फेटअप की बेसिकली 40 रिकमेंडेशंस हैं, और उसके अगेंस्ट में उसने जो है वो 11 आउटकम्स जो है वो डिफाइन किए हुए हैं। तो जो मेन रिकमेंडेशन है ना, वो बेसिकली रिस्क बेस्ड अप्रोच को यूज करने की, वेयर व्हेन देयर इज अ रिस्क, आपकी रिसोर्सेज सारी जो है वो वहीं एलोकेट हो जहां पे आपका रिस्क ज्यादा है। इसीलिए आपने नोट किया होगा, जब भी इंस्पेक्शन होती है रेगुलेटर्स की, जहाँ चाहे वो फाइनेंशियल इंस्टीट्यूशन के लेवल पे हो, चाहे वो डीएनएफबीपी लेवल पे अकाउंटेंट फर्म्स की हो, तो सबसे पहले जो है वो आपसे जो इंस्पेक्टर डिमांड करता है या जो आपसे इंफॉर्मेशन रिक्वायर करता है, वो आपकी इंटरनल रिस्क असेसमेंट मांगता है, ताकि आप ये चेक किया जाए कि जहां रिस्क था वहीं आपके रिसोर्सेज जो हैं वो अप्लाई हुए हैं, या क्योंकि ऐसा नहीं हो सकता, क्योंकि जहां लो रिस्क होगा तो वहां फेटअप भी जो है ना वो आपको थोड़ा सा लीवे देता है कि आप जो है वो अपनी एफर्ट्स को जो है वो थोड़ा सा ड्रॉ डाउन करें, बट जरूरी है कि आपकी रिस्क असेसमेंट जो है वो ठीक हो। सेकंड, जो एक मोस्ट इंपॉर्टेंट फेटअप की रिकमेंडेशन जिसपे हमारा एक्शन प्लान भी था और जो कवर हुआ, दैट वाज अराउंड अगेंस्ट दी स्क्रीनिंग ऑफ द सैंक्शन लिस्ट। बेसिकली ये रिजीम जो है वो फाइनेंशियल इंस्टीट्यूशन में तो मौजूद थी, वो भी काफी जगह पे मैनुअल थी, लेकिन डीएनएफबीपीज और दूसरे इदारों में तो बिल्कुल इसका कोई जन सिरे से कोई वो था ही नहीं। अब ये अच्छी बात ये हुई है कि जो हमारी सैंक्शन लिस्ट है, बेसिकली यूएन सैंक्शन लिस्ट हो गई, या लोकल लिस्ट में मैं कह दूंगा नेक्टा की, प्रोस्क्राइब पर्सन की और प्रोस्क्राइब ऑर्गेनाइजेशंस की, उसकी स्क्रीनिंग जो है वो मस्ट है टू इंश्योर टू एस्टेब्लिश एनी बिजनेस रिलेशनशिप और टू कंटिन्यू एनी बिजनेस रिलेशनशिप। अब उसके लिए आईकैप ने तो खास तौर पे ये थोड़ा सा हमारी फर्म्स के लिए इजी कर दिया था कि अगर आप वेबसाइट पे जाते हैं आईकैप की, तो आपको एक डेडिकेटेड पेज मिलता है एएमएल सीएफटी का। वहां आपको जो है वो इन लिंक्स के, यूएन सेक्शन लिस्ट के भी और नेक्टा के भी, आपको बेसिकली डेटाबेस मिल जाता है। वन क्लिक वो बटन पे आप जो है वहाँ स्क्रीन कर सकते हैं उस वेबसाइट पे ही। आपको इसके लिए कोई डिफरेंट टूल्स की जरूरत नहीं है, बैंक्स के लेवल पे टूल्स पे जाते हैं, बट क्योंकि इसके साथ एक कॉस्ट भी इन्वॉल्व है, तो फर्म्स जो है उसका क्वांटम भी कम है एज कम्पेयर टू बैंक्स वगैरह। तो आईकैप ने ये किया था कि आईकैप ने अपनी वेबसाइट पे जो है वो डेटाबेस मौजूद है, आप उस लिंक को क्लिक करें, वन क्लिक ऑफ बटन पे आप उसको सर्च करें, आपको रिजल्ट्स आ जाएंगे, एंड योर कंप्लायंस विल बी इंश्योर। एक और जरूरी चीज है कि इसके लिए, क्योंकि ऑल दो के इसको काफी टाइम हो चुका है, 2018 से 22 तक हम ग्रे लिस्ट में थे, देन उसके बाद भी 3 साल हो चुके हैं, बट स्टिल दिस टॉपिक इज इवॉल्विंग। एक तो इवॉल्व भी कर रहा है, दूसरा बहुत सी जगहों पे ये अंडरस्टैंडिंग के भी ये काफी इश्यूज हैं। सो इट्स गुड कि हमारी अवेयरनेस जो है वो इसी तरह होती रहे, एसआरसी लेवल पे, आईकेप लेवल पे, गवर्नमेंट लेवल पे भी हो रही है। इसमें फाइनेंशियल मॉनिटरिंग यूनिट का बहुत अच्छा किरदार है, सुमेरा और समीना का, जो इस चीज को जो है वो गवर्नमेंट लेवल पे भी लेके चल रही है। सो इट्स गुड कि हम जो है वो उसको उस लेवल पे भी लेके चलें, और कोशिश ये करें कि जो हमारा म्यूचुअल इवेल्युएशन एक्सरसाइज है इन 2028, सो उस वक्त जो है वो हमारी कंप्लायंस उस लेवल पे हो कि हमें जो है वो फिर से कोई एक्शन प्लान या इस चीज का सामना ना करना पड़े। आई होप आई एम विद इन टाइम, तो इन केस अगर कोई क्वेश्चन है तो उसका मैं जवाब दे सकता हूँ, अदरवाइज थैंक यू वेरी मच।
Thank you very much, Mr. Rahman, for sharing your valuable perspectives and for highlighting the broader regulatory and broader national context surrounding AML and compliance. As we approach the conclusion for today's webinar, it is now my pleasure to invite our respected chairman, Southern Regional Committee of Institute of Chartered Accountants of Pakistan, Mr. Bashir Ahmed, to deliver the closing remarks. He has actively contributed to the profession through his service on several ICAP committees, including professional accountants, in Business Committee and the Education and Training Committee. He currently serves as head of Debt Risk and Investment Management Unit in the Finance Department, Government of Balochistan. Mr. Bashir Ahmed, may I request you now to please share your closing remarks.
Bismillahirrahmanirrahim. Thank you. Distinguished speaker, respected participant, ladies and gentlemen, Assalamu alaikum. As we come to close of today's webinar on anti-money laundering, I would like to express my sincere appreciation to our esteemed speaker for sharing their valuable insights and expertise. Their presentation have provided us with a deeper understanding of the evolving risks of money laundering and the importance of strengthening regulatory framework, institutional coordination, and compliance mechanism. I hope that the knowledge and perspective shared during this webinar will contribute to enhancing our institutional capacity and reinforcing our commitment to transparency, accountability, and effective financial governance. Finally, I extend my appreciation to the organizing team of SRC for successfully organizing this informative session and ensuring its smooth conduct. With these remarks, I declare this session formally closed. Thank you for your participation and I wish you continued success and professional endeavor. Thank you.
Thank you, Bashir Ahmed, for your closing remarks. I hope
Thank
today's
you.
discussion have provided you with practical knowledge and a deeper understanding of anti-money laundering practices, as well as ideas on how to strengthen compliance framework within your organization. On behalf of SRC, I thank you all for making this webinar a success. We look forward to welcoming you at our future events and continuing conversation on critical topics. With that, we conclude today's session, wishing you all a productive day ahead. Thank you.
Thank you.
Thank you.